Hey,
What up?
that beat was sick.
Let's go. Candace, good job on the intro. Welcome in, everybody.
What's
This is
up,
going to be
y'all?
an awesome show. I see everybody in the chat, and we'll see how many people we got in here right now. Got 50 watching already, so appreciate y'all for being here. I got a really good stream planned here with my homies, Goldkey and Dip Catcher, who are man of many talents. They have great visions, and they're wonderful people at the soul level, and they really want what's best for DeFi. And I'm happy to have them on to like run some TA and talk about some of the projects they've been working on. And you know, without further ado, I mean, how you doing, gentlemen?
Doing great, man.
Good. Thanks for having us.
Yeah, I'm trying to remember when the last time we were on a stream together was.
It's really easy for me to remember. Actually, it was the very first time that Wales Only and I ever had a guest speaker on.
Uh-huh.
I think it was my third stream ever, and it was in February of 2021, and we had you on, and we were talking about like because you were in the field of like optics and stuff at that, or you just came out of that realm, and we were talking about that and how curvatures of like light in physics had to do with how the price chart of HEX was moving, and it was amazing conversation. And that was the day that I realized that I was sitting in amidst a gigabrain. And then just so everyone knows, later that year, it was June, I had met Goldkey for the first time. I remember Alex was saying like, "Oh yeah, I'm gonna have my friend Goldkey come with me," and I saw him and met him and talked to him a little bit. And then I came back home and I was on Twitter one day. I was like, "They follow Goldkey, future billionaire." Like that. So that's my story for these two.
Yeah,
they're great.
dude. That was awesome.
I remember that. I remember I thought you two looked alike.
Yeah.
I think we met at the pool at the Vegas event. And
there's a good chance that we might have some sort of lineage that tracks back to the beginning.
For sure. Yeah, that whole time everyone was like, "Wait, are you AXiS?" It was so funny because everyone know who you were, and no one knew who I was at that time at the first Vegas. But
also, if you guys didn't catch this, I re-uploaded a Twitter space that Goldkey hosted a couple what was that, like a week and a half ago? Price was pumping on HEX, it was going bananas, and Goldkey was running a space with Tangent and Dip Catcher, and they were kind of talking price and just kind of like sentiment. And so I got a message on my DMs. He's like, "Yo, what are you doing? Come in here." Jumped right in there, and we ended up getting up to like 500 listeners at one point. And I'm just like looking back on that. That was a really good conversation. So if you want more of that, go into into my videos here on YouTube, and you can go back and listen. And there might be a recording on under Goldkey's Twitter handle as well. So you can find it at either place.
Thanks for uploading that. Yeah, that was such a good space. A lot of crazy amount of people that came in, and then just so much alpha got shared. A lot of people came through and just shared their piece on what was going on. But yeah, that was a really good space.
Yeah, I'm pretty sure there was like
listening back to spaces because like it's like things, because it can kind of hop from like topic to topic, but then you go and listen back and like really high impact information.
Yeah, we got to do that again soon.
Like the community, the smartest in the community is frequently in Twitter spaces and frequently on YouTube. And like, if this is like your first time listening to HEX content or just DeFi content in general, I like to generalize it as DeFi because HEX might be the underlying core layer of it. But if you're just new to this stuff, like there's so much really super valuable information being put out there like on a regular basis. So you shouldn't have to look too hard to find good stuff. And if you do want to know more, hit one of us up and point you in the right direction.
Yeah, I think that's really like powerful cultural aspect of, like the HEX ecosystem is that really, really strong culture of knowledge sharing. I think that like that's kind of how people in a way it's like how they kind of compete with each other is like, who like, sharing quality information, kind of being first on the topic. And that's like a pretty powerful kind of flywheel where it really pushes people to be seeking out new information, new ideas, and then also, sharing those ideas. And I think that's just like a really powerful force that we've got going for us is just, really strong information sharing.
It's like a force multiplier for price, because like the smarter the community is, the more that they're going to be aligned and thinking a similar way. And because of the way that in how HEX is structured, which is like long-term thinking, that alignment of things works, of values and interests and ideas works well, because the price tends to go up in the direction of that long-term thinking. Whereas a lot of people are thinking the same thing on a short-term basis. That's a good way to get counter traded, and then it actually is bad for price. So it's kind of interesting in that way, how there's that dichotomy there, but it works so like that we're all aligned and sharing high valuable information, so that in the case of like Hex, which is a store of value similar to how Bitcoin, that you don't get left behind and never get access to that floor price that's never going to come back, right? That's like I keep thumping my chest about that, because once 5 cent Hex is gone, it's gone forever and it's not coming back.
Yeah.
Aaron Hernandez.
No, 100%. I've been like popping into other communities, and something about Hex, just the pursuit. I would say it's more like the pursuit of knowledge and the sharing, because we are very active on like YouTube and stuff. But a lot of these communities are just kind of like echo chambers of like repeating how they're going to change the world and stuff. And I do think Hex has the potential to, but we like the information that we pursue is like, I don't know, like actually like groundbreaking stuff around trustless DeFi and yield bearing assets. And like, I don't know, I'm very happy that I found a community that, cares about the right things and doesn't just like BS all day. So yeah, very fortunate to be here.
It's good that you can like rally behind an asset that's going to go up in price, and that it will end up being better for everybody involved. But you can't say the same about a lot of the other stuff. I know a lot of the haters' arguments for being against Hex or Pulse Chain is that it's just either a copy paste of Ethereum, so it's doing the same thing and there's no innovation, or in the case of Hex, like it's just an ERC20, so it has no value. Obviously, that's not true. Just purely not true, because like the underlying code has so many value propositions built into it, regardless of what the price ticker says the price is. It's just a function of social consensus, Metcalfe's law, common understanding rooted in long-term vision, like the monetary policy that's built into the contract and the immutability of it. And I know I'm using a lot of big words. If you haven't heard this stuff before, it's important to know. It's that code can't be changed, and the inflation rate can't be changed, which is important because then it leads to a certain level of predictability. And we know that that's good for markets, because in legacy markets, when interest rates become predictable, the stock market goes up. When the Federal Reserve, as the central authority figure, says we're dropping rates fast and hard, that's when the market tanks. And like, so that unpredictability is what creates chaos and distress in the economic system. But in Hex, there's none of that. You just have consistent 3.69% inflation rate forever that no one, not even the founder, can change, because there's no admin keys come in and adjust the code. So in the case of these guys, they've actually went along and they've developed layers on top of Hex, that are doing things for the user that weren't thought of when Hex was created, that add value to it. So like in the case of the perpetuals, which the word perpetual means it's a perpetual contract. So, or in this case, a tokenized stake. When you stake Hex, inevitably one day that stake's going to mature, and regardless of how much money's behind that, like you're going to have to pay a gas fee in Ethereum, and that gas fee is going to be quite expensive and pricey in the future. But these guys came along and gave you a way to trade stakes on the value that it's trading at on market. Well, if you need to in the short term for liquidity, and not be like completely locked in. And also, when those stakes do mature, you can trade those coins back in for the Hex plus the interest of the stake. So it's really got a dual value mechanism there, another layer built on top of like a Hex stake. And I think it's going kind of missed by a lot of the community. And what we call this in legacy finance is an inverted yield curve, because what's happening in this system, I'll kind of exclude Maxi. That's the 15-year Hex stake with the most Hex in it, right? It is the most, right? 250.
No, Desi's the largest.
Desi's the largest by like, what was it? Did 300?
I think it's over 500.
Maxi was 294 million. Hex principal. Deci was like what, 600 or 700?
Okay, I didn't know that.
Yeah,
it's a big boy.
But yeah, I mean, you sorry, what were you saying about the inverted yield curve?
Basically basically what this is happening, and I'll bring up my screen now and show you guys what I mean. Basically in legacy finance, you can compare Hex and the staked Hex to a bond. And how that works is you can go buy a bond for 6 months, you can buy it for a year, 2 years, 6 years, 10 years, 15, 20, 30 years, bonds, and then your money's locked up in the Federal Reserve note in a bond, and then you produce a yield every year, kind of like how Hex gives you staking yield, right? But one way that you measure the health of the US economy is by this thing called yield curve. So if you're putting your money in for a year, your yield should be less than if you put your money in for 30 years. But what's happening in the economy right now is that the yield curve is inverted, meaning if you put your money in for a year, you're going to get a higher interest rate than if you put your money in for 30 years. So how does that make any sense, right? So that's one of the big red flags that's going on in the economy right now. And what's funny is that this short-term mindset of investors right now is actually being applied to the Hex perpetuals in the same way, in that Deci and Lucky are hugely discounted relative to Hex, while Base and Trio are more at parity or slightly premium. So this inverted yield curve concept is actually happening in the DeFi space the same way as it is in the regular economy right now. It's just a correlation that I've noticed.
Yeah. I mean, I think probably the main thing driving that is that just like it's like the market pricing in like how certain the future yield is. And because with Base, it's Base, the stake started in late September, so it ends in early October. That's in 8 months from now, and so it's already 33% of the way done. And so the remaining time is just 2 times the time that it's already served. And so and the market is could just kind of until the redemption period, the market is kind of just like loosely pricing in the future yield, and then discounting to the liquidity of just where like compared to like if you're buying into like any of these pools, there's less liquidity than just on the normal hex pair. So it's discounting that liquidity, is discounting the time, and then that's and also there's just like the speculative nature of the people that minted it, and so kind of all these things are factored into the price. But it kind of makes sense that the longer ones have deeper discounts purely because there's more uncertainty in their earnings and it's so much further away. But then also, with Deci in particular, it was so oversubscribed compared to Maxi. Like Maxi had 300 million, Hex staked, and then no one thought that we talked a little bit about premiums and discounts, but no one expected that massive run up that Maxi had. And also, since Maxi was part of the team launch, and as of now, like if you look at the top Maxi holders, it's the team mystery box and the escrow contract. And so the mystery box so far has just held the Maxi, and the escrow contract has tens of millions of Maxi locked up for 3, 6, and 9 years in increasing increments. And so Maxi had a big liquidity and like liquid supply shock due to the launch of the perpetuals and team. So that may have contributed to kind of an anomalous premium there. But since people saw Maxi just ratchet up right out the gate, they thought that was going to happen to Deci. But because because everyone thought that, kind of what you're saying before off the stream, everyone thought a short-term thing was going to happen, and so that's why it didn't happen. And so so there was just so much supply of people expecting a massive just like ratchet up, that now that's a bunch of saleable supply now that trade hasn't really taken root. And then combined with it's redeemable in 10 years compared to Base, which is redeemable in 1 year, so you have less time to get it back if you were to sell, or you have more time to get it back, so it's a little less urgent to buy. Like if you want your Deci back, you got 10 years to get it. And so it kind of makes sense why the longer ones, because they're inherently higher risk, they have that lower price. But the fact that they have any price at all, like that's a huge breakthrough, because like had you staked your own 10-year stake at the beginning of October, you'd be fully nuke zone for a couple years. And so the fact that you can sell the exposure to the 10-year stake for 80% of principal value, like it's almost like until it reaches that threshold, it's almost like there's infinite premium on all the pools, like up until the point where as so long as an equivalent stake would have been nuked early end staking today, then in a way it's kind of like infinite premium. So there's a lot of ways to even consider the discount.
100%.
Yeah.
100%. And I think like, so, Dip Catcher just like hit on so many different variables in this. And I know that can be like kind of like overwhelming. So if we just run some typical analysis and think about some of the things you just said, maybe we'll get a clearer picture. So when it comes to the longer end of the stakes, in particular, we'll talk about the 10-year stake, DESI. If twice as many DESI was minted as Maxi, which is true by a factor of 300 million more, and people did expect a certain performance out of DESI, the same as what happened with Maxi, which was Maxi ended up becoming worth 2.5 times a HEX. You were immediately able to realize 2.5 times profit by flipping your Maxi back into HEX, right? That's what happened. And so if people assumed that, and that did not happen, and somebody front ran that trade and sold it early for like 15% more HEX, which is what occurred here. Now there's all that extra supply, and now you've made a lower high on the chart. And so then this is just basically forced selling. That is now, you can see this as a very bullish thing, because what it is it's people that wanted to make a quick flip. They're now forced to sell down the price, way oversold into territories that it should never even hit. So when DESI does finally hit its bottom, which I could say the same for Lucky too, when they finally hit their lows, you're never going to probably see that level of discount on them again, because by the time that's all said and done, these perpetual stakes are going to come back and try to meet parity over time. So that if you zoom out, effectively, if the yellow line means 1 DESI equals 1 HEX, eventually, if the price is oscillated properly, they would just do this forever, and you could buy them at a higher low on the discount for pretty much forever. But we all know how crypto really runs, and I think this is where I kind of want to step in here as somebody who's not a founder or a dev and say, when a whale comes in on low liquidity and pushes this price back up to this level, it's going to start to form something called an ascending triangle, and it's going to start to create structure here, because somebody's going to come in, absorb a ton of the supply, knowing that the long term, and this could be this year, it could be next year, it could be on year 5. The closer you get to the end of the stake, the closer it's going to want to meet parity. And so that's an easy way of thinking about how a whale can come in and play that. But the other element that we have to consider as well, totally another layer of this, is market cycle theory. So like in market cycle theory, we know if HEX is a store of value and Bitcoin's a store of value, and they both tend to do these huge multiples off the all-time high and these huge bull market runs, they're gonna create floors in price. And when they get to that ceiling price, or what was previously the all-time high, these store of value tokens tend to have huge speculative run-ups in price. And so, HEX might be first mover and might leave DESI behind a little bit for a while. But once that full-on bull market force is there, and HEX is like trading at dollars of valuation, if DESI's still in like the penny ranges of like 10 cents, 50 cents, or 75 cents, and a HEX is worth like $2 to $3, for example, there's going to be a huge opportunity on low liquidity for large players to absorb tons of the supply and just moonshot price. And then, once this move happens, then it's all bets are off, because once you enter speculation, that's when I believe that these tokenized HEX stakes are going to really start to take off in price and reach speculative valuations that, we can't predict, right?
Yeah. I mean, I think one day suddenly they'll price in the redemption value. Like it'll You know, I think that the early chart that I drew was like just on the original website, kind of showed it oscillating around the net asset value reflecting the earnings. But the more I just kind of think about it, I think that suddenly, just like a feat of momentum, as it approaches that end date, just suddenly, like, you know, people won't just treat that minting value, because then by, you know, especially as time goes on, people kind of forget about the minting value. It's like right now, minting value is kind of high in the mind because it was 4 months ago. But at some point, people are going to be more thinking about that redemption value. And I think that as the redemption value comes to like top of mind instead of just the minting value, you know, we may just see some ratcheting up where it kind of looks like just like a big square wave where it's just like, you know, da 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 da, then boom, redemption value. Because it's especially early on, like you when you have to kind of put yourself in the perspective of someone who's going to be buying exposure to a hex stake through these products. And like really the question they're asking themselves is, am I going to get more hex by, say, buying base today, or by staking, like if I took my liquid hex and staking for the remaining period? And so right now, if base is at 1-to-1 parity, the T-share rate that base locked in is lower than what you'd be locking in today.
Mm-hmm.
Doing a 9-month stake starting today till end of base versus just buying base at 1-to-1. It's like if you're buying base 1-to-1, it's like you're getting 12 months of yield in 9 months. And so that like head-to-head comparison, I think that can be what causes that like big ratcheting up, is that, you know, every day that goes by that any of them stay at or below that 1-to-1 minting rate, you're getting, you know, 12 months of yield in 9 months. And so your effective APY in that setting can be much higher, because if you annualize, that like 9 month, if you're getting, what would that be? So 12 versus 9, that's like 25%. You're getting the same yield in
less time,
25% less time.
And I don't think that gas fees are priced in yet either. I think people are strictly thinking about redemption rate. They're not thinking about the gas fee issue. And what's the other thing they're not thinking about? It'll come back to me. That's the main thing though, is like they're not, there's other layers of abstraction that's built into this thing that, the bigger pays better bonus, the 10%. Like that's something that you can get exposure to at 3 months left on a 5-year stake, or 3 months left or on a 3-year or a 7-year stake. Like imagine you're coming up on the last year and it's hugely discounted, and you can get all that 10% bigger pays better bonus rather than, and you've made up for the loss of time value, all by making a purchase of a discounted hex stake. So eventually these things are just going to scream. Okay? It's a huge opportunity here, right?
I definitely think that at least what I'm observing with Deci especially is that I don't think people that minted Deci really like were minting for a 10-year stake. I think, I think this was already mentioned, but they saw Maxi, and they kind of speculated that could do the same in that short period of time. And so what we're really seeing right now is kind of a redistribution of these assets into the hands of the people that are going to hold them. And you'll notice like the volume on the daily volume is pretty low. And I think, to a lot of people that's like concerning, but these aren't your typical assets. Like I kind of coined the term alpha tokens, because I think over time, it's probably going to go down, because the people that are holding these, like we saw the participation in diamond hands, like a lot of, like, I think 11% of all the perpetuals are in diamond hands. So a lot of people are utilizing these as hex stakes and not, speculating. And I think over time, like, there's going to be more accumulation, but we will probably see even less people putting these on market. I'm sure there's going to be LPs that do play that game, but a lot of people, probably won't be selling these as they get to maturity, because they just plan to redeem and utilize them as stakes.
How do you feel about this theory? And because I agree with you that that's optimal behavior, is that people would buy them and hold them. But I think actually you're going to have a thing where that might be true of right now and into the short term, but that at some point there's going to be insane volumes that's going to come into these tokens. And the reason why I think that is because at some point the discount becomes so juicy and people have made so much freaking money in HEX, the token that they're holding, that they'll be able to swap 10% of their HEX at $5 to buy a 50-cent DESI token. And so,
Yeah.
like, if hundreds or thousands of people are taking 10% of their 500x gains and putting it into something at a 90% discount, eventually the
Yeah.
scales flips back, and then you get this huge flush of new people that comes into this token. And that's not even accounting for new players that are going to come into this system. Like, we're talking
Yeah.
like hedge funds and financial advisor people and like brokers and stuff that are going to need to come in and get exposure to the HEX T-share rate. And because they've been left behind on maybe like the HEX price natively, then they're going to have to find other ways to get exposure. And so I think that these will have a huge burst of volume in the future during the bull market.
I tend to agree. I think I think the market psychology right now is just everyone is so short term. Like I've just been really, really surprised. Like you would think with like a community like HEX and just like the average stake length that people would be a little longer. But I think a lot of people, especially like, me and Dip Catcher have both done polls on like when people got into HEX. Most people got in 2001. They're just trying to make some money in crypto at this point. And so they're looking at other assets. They're trying to speculate, trying to flip, do a quick, couple month flip to try to make a couple X's. They're not, majority of people I don't think are really thinking long-term horizon. Like 10 years is a pretty long time. But I think what we'll start to see, like you were talking about, people over time will, once they really experience a HEX pump and they're like, okay, yeah, I'm much longer on this than I was in that first year, in HEX. I think you're right. I definitely think people will see a lot more volatility. And kind of like back to a point that we talked about earlier, like, with Base and Trio, those shorter term stakes, the volatility isn't that high, but with Maxi and Desi, we could see massive, premiums and discounts, more, bigger than what we've seen already. Just because of that longer time horizon, and just the volume, like it could definitely oscillate around that backing value a lot more than the shorter term.
Yeah, and also, I mean, Maxi is kind of anomalous because of because it was related to, I mean, honestly, like a couple of events, being related to the team launch where you had to mint Maxi with team, and then a couple weeks before that, Maxi was accepted for the Watsa launch, and so the Hedron deployer at the time became the largest holder of Maxi, and until the team launch, and then so that like when you look at the Maxi chart, the top three holders go Mystery Box, the 369 escrow contract, the Hedron deployer, and then now the fiat sacrifice. And so the Maxi supply has kind of consolidated into, Mystery Box. Of course, that's a mystery. No one knows what will come of the Mystery Box, but so far it's just hoarded the Maxi. And then the escrow, that's like programmed hoarding for 3, 6, and 9 years. And then the Hedron deployer, which their actions with Maxi have been burning Maxi. They burnt about 1 million Maxi. So increasing the redemption rate per Maxi that remained. And then they minted a bunch of team, became the largest team minter. And then they've done nothing with the Maxi. Who knows what the fiat sacrifice does? I think that one will probably, of all those assets, that one is like highest likelihood to sell. But the Maxi supply is kind of consolidated due to a handful of different launches. And just there hasn't, an event like that hasn't happened with any of the others. There could be other launches,
we should
other
talk
aspects
about
that build around it that kind of suck in a lot of, or like consolidate a lot of that liquid, more speculative supply. Because like a lot of them, a lot of the Maxi, the Maxi that went into team, that's like of the highly speculative Maxi. That's not people's like 15-year hoard Maxi that's equivalent to their own HEX stake. That's like the Maxi that they're speculating with. And so with Desi being more of like, owned by a more speculative audience, and even the demographics across the minting was a lot different. The size of the average minter on Desi was something like 4 times greater than the average size of a minter on Maxi. Like Maxi had half the amount of principal over 5,400 people, whereas DESI only had about 3,000 minters, but it had twice as much. And so DESI, like the per person basis, was a much higher, a lot more speculative
Reminds
audience.
me of the pulse chain versus the pulse X sacrifice phases. Like Maxi was like the first thing that came out. You know, more people got, or let's see, pulse chain actually less people got exposure than pulse X. In the case of Maxi, more people got exposure, right?
Yeah, more people,
More people got
smaller amount
exposure,
per
and it was
person.
smaller amounts per person, so it was more evenly distributed.
Mhm.
And then in the case of, yeah, that's interesting. Yeah.
Yeah. So there are a lot of dynamics related to just the who owns the tokens.
Yeah.
That make an impact there.
So from a technical level on Maxi, we'll just go through like one of the big events that happened this week. So if you didn't hear, some big Maxi holder came in and dumped a ton of Maxi. I don't remember the amount, but it was like 300. I don't remember how many. It was a ton. I have it in my blog post if you want to go find out more about that. But he basically took and he converted a ton of Maxi and slipped the price down to the discount for the first time Maxi's been at a discount since launch. So Maxi hadn't been at a discount in freaking 288 days, which marked a huge opportunity. And anybody that had limit orders in here, you know, this was not one of those unpredictable things, made like an instant 22%, like in 15 minutes, you know, 15 minutes, half hour. And now you see price support coming in. And so because maybe that a lot of the major amounts of the supply is in fewer hands, and that seems to be like hands that, you know, maybe not are going to hurt the price, you might get some sort of a reaction where the price of Maxi starts to like create a floor, you know, in a premium, you know. So just something to think about. Anytime you get these big wicks in the past, I would say that not with 100% certainty, but that you know, I think Maxi's like the holy grail of the Maximus DAO like suite of tokens, and that you know, if you're gonna want to get exposure on like a 15-year stake to get out of like the gas fee thing and already have like almost a year locked in on time, this would be like a good thing to go after. Like if you did like a 15-year stake, here, what would that cost you in the bull market? Yeah, so like even if Gwei, like, so typically I'll say like 125 Gwei was like what I saw.
I have a really good calculator on one of my sites. Go to endstakegas.anvil.app. Endstakegas.anvil.app. I have the like you can have an ETH little
Nice.
Yeah. So that you can toggle the ETH.
So like I was seeing like 125 Gwei like on a great day in the bull market, right?
Yeah.
And like, you know, I projected prices for ETH to go at least back, let's just say at least back to all-time high, like $5,000. You know, at 1.6, you know, it's going to cost you about $8,000 to end a 15-year stake, and that's at a bare minimum. On a bad day, you're looking at like 300 Gwei. Like it's going to cost you like $20,000 to end a 15-year stake. But with these perpetuals, it's actually giving you an out to get exposure to the bigger pays better bonus and to get out of paying the gas fee.
Mm-hmm.
So it's at some point that reality is going to set in for people. And if they want to play the game on Ethereum, which is where I believe a lot of the OGs are going to play the game of HEX, because it'll be like a status symbol, like, oh yeah, I have big bags on HEX on ETH. You know, I was an OG. I have all this economic weight over there. You know, ETH's not going to be an issue for them, but if you want exposure to that luxury good over there on that side of the chain, versus like Pulse chain, where things might be a little easier and smoother flowing, this might be one of the avenues you go through to get that. You know. So.
Mm-hmm. Yeah, and also, I mean, you know, because if like for Maxi, for instance, I mean, there are 5,400 minters. Who knows how many people own the tokens at the end? You know, maybe all the coins just get absorbed in a handful of, you know, addresses by then. But you never know. But you know, it's thousands, splitting that gas fee over thousands of people, because the way they're all set up is that they record who ended the stake, and so another contract can be like layered on top where people can pool gas, where, you know, people just send ETH in and then that will reimburse the gas payer. And so you know, it's splitting that over, you know, a bunch of people. So it's like, compared to just staking on your own, that depending on the size of your stake, like that can be a major component of your earnings. And so probably what I think Alex from Hedron actually kind of, you know, brought this up to me, that his prediction is that the around the 7-year mark, a lot of the max length stakes are going to be ending, because they maybe there's a bear market in ETH and they have low gas prices at that time. They get back their principal and they don't want to double the cost. It's effectively doubling the cost of gas, like on a per gas unit basis. So a lot of people may be ending around that 7-year mark, and guess who's going to be absorbing all those penalties? Because everyone that ends, they're paying a penalty to the remaining T shareholders, and they're simultaneously removing T shares that were scheduled to exist for 7 more years. And so the simultaneous, just like massive penalties, all the yield up through 7 years in penalties that they're giving up, combined with those T shares now no longer competing for each extra day. The earnings per maxi T share could be shocking, like just with all, like, because everyone else is going to have a hard time paying for their end stakes. Maybe, because like
there's a huge thing that's going to happen at that point. I just, this is some deep alpha for you guys for being here. The reality of it is that there is going to be a class of X stakers that is going to start pulling a lot of their 15-year stakes and a lot of their 10-year stakes between years 5 and 7.5. Because, gas fees get affordable again. They're going to see an opportunity to sell, HEX at $2 when it came back down from $20, and they're going to capitulate at the lows of the next bear, for example. But they're going to have the cheap gas too, so they're going to get, like, maybe that they were trapped in a stake. This is going to happen to people. They're going to have gotten trapped in a stake, and then they're going to have to EES, they'll have to capitulate out in the next bear. The ultimate winner of this is the guy that's holding the bag at the end of the line. You know what I mean? And this is the importance of laddering your stakes out. And I just wanted to go back and, like, I know I'm jumping around a little bit, but this is back to that whole treasury yield, idea. This is what a healthy yield curve looks like, is when your 1 month and your 3 month and your 6 month bonds are paying you a lower interest rate than like your 5-year, 10-year, and your 30-year bonds. But currently in the economy, if you go back to like what it's like right now, you see this, where the short-term bonds, your short-term commitments are paying you more than your long-term commitments. And this is a reflection of this instant gratification economy and this instant gratification psychology that we have in the marketplace right now. And so apply this same thinking to these perpetuals, and that eventually the yield curve is going to revert, and it's going to go back to the longer term stakes are going to be worth more. And that's because that's just a function of all of the value accrual inside of the stake. The bigger pays better bonus, the getting out of the gas fees, the so all these like layers stack, right? So yeah, I do see that there is going to be a huge volume boost in the next cycle, and that there's other value that's not being priced in right now currently for whatever reason.
100%.
So let's start to shift the conversation now. There's a couple things we could talk about. I kind of want to do some TA, and then we can talk about the Dip Catcher algorithm in particular. So, but first, let's show you guys the HEX chart, and I'm sure somebody would love to see that. Currently, this is HEX trading against Bitcoin on the daily, and HEX is actually posted up in a pennant pattern, in a bullish pennant, as you can see here in this box. I'll read it for you because you probably can't see it on screen, but bull pennants are easily recognizable in popular chart patterns. The difference between a pennant and a bull flag is that a pennant has a lower success rate, meaning this pattern could break down. And the type of thing that would make this pattern break down is if Bitcoin rips to like 28K, 36K, and HEX only slowly chops up to 6, 7, and 8 cents slower, then this would actually start to break down and grind along this grind line right here, which is a possibility, but it wouldn't necessarily be bearish for the HEX price in dollar terms. It would just be bearish for HEX price in Bitcoin terms, short term. Or currently, it's looking more like it's going to break up and test. And the reason why I say that is because we're on the edge of a liquidity wall. So this is the liquidity bands. If you've been following my channel for the last couple of weeks, actually for like 6 months, I've been basically since last summer. Damn, it's been a while now. I've been talking about liquidity. This is like a really important concept to kind of grasp and get your mind around. You really want to understand DeFi. Right now, the price is at 5.5 cents on a breakout. You can see that here. That the price has basically just been chopping its way up into the right now for weeks, off a 220% run off the peak, and you just continually seeing this test of the wall and then a sell down, test of the wall, sell down, test of the wall, sell down, but you keep making higher highs, and that's a function of this liquidity here. Where I'll take a screenshot and then I'll draw on it for you guys. Basically, if you can imagine with me that all of this square box right here is where the most of the trading fees are being made. And this is a function of people that put up liquidity so that they can make, money on your trades, basically. But what happened about a week and a half ago was price moved up to 5.5 cents and then came back down to test this band here at 4.2 cents. And, a lot of your TA guys were saying, oh, it's going to go down to 3.2 to 3.5 cents to test. And if it holds there, you're good. And, from a technical perspective, I agree with that. And I was on that train too when we were moving up because the move was so violent. But then when I saw this wall come in here, and then test to come back or the price to come back in to test this area, that's when you saw big buys come in. And what that told me was that somebody here is supporting the price and not wanting it to go lower. And this is a function of the market psychology of max paying to the upside and leaving everybody behind who was a non-believer or who capitulated at the lows, not giving them a second chance to come back in and purchase the coin at 2 and 3 cents, and just basically just rip the price and force them to become buy liquidity to the upside. So now what you have effectively is, after coming up to test this edge of this band where the most of the liquidity is, it keeps slipping off into the lower liquidity ranges and then testing where there's none and then falling back in. It'll come out, test these little areas here, 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 and then it'll come back down and get sold back into the band. But every time it gets sold, it like goes out, gets sold back, goes out, gets sold back, goes out, gets sold back. But it's keep making higher highs on the price chart. And so as this is happening, the market's realizing that, oh shit, I am not making any money back here with USDC, and I'm also not holding any HEX right now liquid. Then they have to move this liquidity out from back here at 2 and 3 cents and put it out here in the front. And so now what we've seen over the last week or so is that more and more liquidity is getting put out here at 5, 6, 7, 8, 9, 10, 11 cents. And eventually, this band of liquidity here is going to get pushed out here as price moves out this way. So if that makes sense, then you can kind of follow me here, that because this price support was so strong and that the price keeps coming up to test the highs and then getting pushed back, and then now that the market sentiment is starting to change and people are starting to really feel the FOMO and want to get exposure to this thing before it leaves them behind, you'll understand that Bitcoin's strong right now, Ethereum's strong. So whatever's happening on these pairs, it's showing also bullish continuation. Like the whole market is bullish right now, and people should be concerned that if they don't have it and they're waiting for lower prices, that's where like for me, for about 4 or 5 months, it's always been a function of, I'm nervous of the upside. I'm not really nervous of the downside. Like, we're already down 95% in an asset I think is going to be here for 50 years. So like, to me, this is a store of value. Well, I'm more scared of the price leaving me behind, because trust me, when the price goes up 100x without you, you're way more pissed off and annoyed than when it goes down 95% on you, but you know that it's going to come back.
Yeah.
Yeah, and even if you zoom out on the HEX BTC chart to just like the all-time, like on the weekly or monthly, it's such beautiful, just like a harmonic structure. Because I don't think that chart shows. Oh yeah, there it is. Just like even though this one is longer, maybe it's like some type of like lengthening cycle type of situation going on, but it's almost like an identical, but longer, big leg up consolidation, big leg up consolidation. And it's like we bounced pretty well off of the previous resistance level. And if that turns to support and like a new price floor, and also, by then it's like people really just like go off the price that they remember. And since most people are really getting in, you know, after 2021, you know, people start remembering where it was more recent. And so now that could become the new, you know, support and like generational lows measured in Bitcoin. And then, you know, so I think that this chart gives a better sense because it doesn't just capture just like general crypto, you know, and all market like downturn. Like it's like the HEX chart relative to the Bitcoin chart. It's, you know, it's like Bitcoin's like the longest standing store of value savings, like long-term savings reserve asset type, and HEX is like the emerging competitor. And so that's like really the important chart to look at there. And you know, you have this emerging competitor that's just kind of ratcheting up in a really like healthy and natural way. You know, it's like it spends more time. I mean, if you look at it, it spends more time trending down, but the trends up are just order of magnitude gains. And so it's actually like a really kind of healthy setup there.
Nothing does this to Bitcoin. This is direct competition with Bitcoin, and nothing does this to Bitcoin. Like I've looked at tons of altcoins, and they just don't do this. And so I think this is like, you know, Richard Hart's been, you know, come out and said that, you know, he wants to be the best performing asset that's ever existed. And what's the best performing asset that's ever existed so far? It's Bitcoin.
Yeah.
Period. And so he wants to beat Bitcoin in the chart. Like this tech from a technical perspective is literally just repeating history right now.
Yeah.
You see it here. I can literally even copy the trend line and it gives you a general picture. Right. So theoretically, if you do get a similar move on this here, and I've been posting on Twitter a lot lately, like if you get like some consolidation, which means Bitcoin continues to rise and HEX rises with it, but in general terms that they're rising up at the same rate, or Bitcoin slightly outpacing, that means that on this chart, the HEX price can go sideways for like 2 to 3, 4 weeks even before really ripping against Bitcoin and seeing that huge 1,000% gain, which is a typical thing that happens on HEX when HEX does 3 green months in USD terms. It goes big. It goes 900 to 1,000%.
And also what's not even captured on that, which would make the chart look even more bullish, is that like what was the HEX like the total HEX supply in mid 2020 like at the prior like low in that HEX versus Bitcoin cycle, like what was the supply at that time relative to what was like what the supply is now?
This is an important element to how the price moves, is like how many hundreds of millions of HEX was in user hands at this time. And then you had that what's that called when there's a huge shift in like purchasing power of an asset? The word's escaping me. A new it's a new order
on the chart. A
Wealth
repricing,
transfer?
basically,
like price discovery, repricing.
No, if people were trading hundreds of millions here, users do not have hundreds of millions here. They don't. Like all that's out of the system now. So now that supply has been reduced and you have this new rarity going on again, now there can be a new epoch basically of price discovery where it just makes these huge legs up, because the epoch of time is now that general users just don't have hundreds of millions anymore. They might have had them here, but then they were left behind. Then they capitulated or sold, and then they were left behind. And then the few had diamond hands still have them, but the few are now we're back at the same place again, where we're at the few again, where there's the few that has 100 million or 50 million or 10 million, and the rest of the majority now has to accumulate and compete for resources again as a price rises, which causes this compounding effect where the price is moving up against a diminishing supply, like De Beers diamonds.
What do you think has more impact on HEX, like the macro stuff going on, or kind of the micro stuff within our ecosystem? Is like, we talk about the pulse chain hype, kind of like a buy the rumor, sell the news. I'm always like trying to figure out, especially in like low liquidity environments, like what is having more of an impact. Like is the the Fed rate impacting HEX price more, or is Richard Hart tweets? Like what are your thoughts there?
So I basically can draw your attention to the correlations matrix. So we'll start there. We'll start with the fact that over the last year, HEX has been doing the same price movements as Bitcoin 55% of the time, and it's been doing the same price movements as ETH 64% of the time. But over the last 30 days, now it's only doing the same as Bitcoin 23% of the time, and only 29% of the time is ETH. But in the last 7 days, with the way it's acted, now you're actually seeing an even bigger. Oh, wow, that changed. Actually, it was like less before. So in the last few days, now it's recorrelating back to the larger market.
Yeah.
I think as the price is settling and entering a new sentiment zone, I think that HEX is, what I've been seeing lately is that when it makes its big moves up, it's decorrelating, and then when it consolidates, it recorrelates. And I think that's just like the ebb and flows of money in and out of ETH, probably more than anything. Because if you look at the ETH chart here, this wall of Ethereum sitting out here, it's only like 200 or 240 Ethereum, but this wall just keeps getting pushed out, and then Ethereums are arbitraging, or Ethereum-based value like lovers are arbitraging this price growth on HEX and keeping the price kind of like growing stably instead of it just ripping off into no man's land. And I think like all markets have been, over the last 500 days, including HEX, have been tied to general like sentiment and just like a lack of liquidity because of the lack of money printing.
Yeah. I don't remember if it was like in a stream we had or if I was listening to you, but you had spoke about how whales had kind of like, I don't think collusion's the right word, but like it was definitely like an effort, like a joint effort of whales in this past run up. Could you speak on that, or do you still feel that way? Or
I think there was a coordinated group of sellers.
Yeah.
I mean, I've heard rumors, there's things that you hear, like in this and on the topic of people selling between years 5 and 7.5.
Yeah.
That's things you hear, the rumblings amongst big players in the system. It's just like, I got to walk a fine line about being transparent about the realities of the system, especially with my clients. And, it's ultimately the guy that's like can make it through into the 2030s on both chains with full bags like that's going to be the ultimate winner.
Yeah.
What happens between now and then, we can only speculate, but I think you get like 1 to 2 more cycles between now and then. And when you factor in lengthening cycles, it might not be till the mid 2030s or the mid or 2040 until you really realize, for a guy that's DCAing in now, that guy might realize like $100 million of USD profit.
Full bags,
That's still
chains, can't lose forever.
Sure. Right.
Yeah, I mean, it is surprising.
Oh,
like,
I forgot to say before I forget, the Hedron 10x multipliers and all that. That's going to leave those guys that wants to exit the system early in like year 5 or year 7.5. They're really going to have to think about like, do I want to give up all this Hedron yield?
Yeah.
For the next 7.5 years, because like by the time HEX goes through another bull cycle, Hedron could do 100x or 500x. And are you really going to want to give up? That might be just enough to keep more people on the hook, keeping their stakes in, than would have if Hedron did not exist. And so, interesting relationship there too. To think of.
And also, I mean, if all those people are giving up all that Hedron that could have been minted, and maybe the market was pricing in to be minted, and if there really is a lot of early end staking in that 5 to 7 year, and I mean really beyond, because every day, at that point will be someone's 7-year mark on a 15-year, and so all that Hedron that was scheduled to come out is just not going to be there. And I think that's a really for massive. I mean, 2 of our products are basically 15-year long Hedron hoards. We have Maxi, which every day it can accumulate its Hedron, but the Hedron's sitting there till redemption. So so Maxi is like a major 15-year.
Completely missed that hoarder part when we were talking about that stuff earlier. Is like that's like the 4th leg of value that's on those perps. That like again, people are thinking about redemption rate and they're forgetting the other 3 layers of value that's built in.
Yeah.
You should make a cheat sheet that says this is all the value you guys aren't thinking about when you're letting this stuff go on discount. You know what I mean? So
100%. Well, there's just so many ways to look at And I think we're all learning, right? Like no one's created hex stake pools before. We're all trying to like understand how to value these best. When it first launched, we were looking at like, just simple price premium, because that's what it was minted. Now we're kind of looking at like the accrued value versus, market price. So, we're looking at like valuation here. And then I think Dip Catcher kind of spoke on it, but one thing we're like looking into how to to show and to express to people to look at is like, when you think like around base, considering if you were to start a hex stake with the same amount of hex, so you had like 100,000 hex for the remaining days of base versus buying base with 100,000 hex, like how much more hex are you going to end up with? And so I don't even know. We haven't really named that one, maybe like comparative value, but like that's probably the best way to like really try to understand,
If I had a tool that could let me drag my sliders around, kind of like your gas calculator, and drag it around for the bigger pays, better payout bonus, any hedron that would be accumulated in hedron terms and in dollar terms, the hex yield in dollar terms and in hex terms, and also for me to slide and adjust prices, this would be like an ultimate calculator model for figuring out valuations at different market sentiments, right? And I know there's a lot that goes into a calculator like that, but having a tool like that could be really, really useful and kind of like really draw a clear picture of what these things are capable of.
Yeah. But also, I mean, to be clear to the people listening, so Maxi gets the hedron, but the perpetuals, the hedron is paid to team stakers. And so that's the like kind of how team is like a way to get exposure to all the hex stakes in the pools, and it's like a growth engine where like larger perpetual pools, higher income for team stakers. So like team is is like a massive earner of hedron in that sense. And
it's got 9.1 billion already, right?
Yeah, and that's only from the hedron. So that was the hedron from the poly launch, for similar fashion. But when base ends, that doesn't show the hedron in the base stake.
True. Is there a way to calculate that out so that we could know maybe the future earnings of that?
Yeah. So that one you can be certain. So it's the base T shares times days times 1,000, no bonus.
Man, there's just so many layers that you can add in here to give people more information about where the value is coming from. We've nailed like 3 or 4 major variables already.
There's so much game theory in these, but it's like, there's two sides of this coin, right? Like on one end, it's like these products are actually making hex staking so much easier. Like if you just buy a token and then you can burn it and redeem hex. So on one end, it's like, do we want to make it as simple as possible for people to just get in? But then there's like people like us that just love, diving into like every possible like.
No, I think you're right. You need to hide that stuff behind like an advanced user engine, right?
Yeah.
But like for the regular people that's coming to just get exposure, like your everyday DeFi user, then this is already overwhelming, right?
Yeah.
So that's a fine line to walk. And I like that on that main page, like you're just giving them the basic stats. How much is one of these worth comparatively in hex, right? That's super awesome.
Yeah, so, I mean, awesome. This came out really well, and we'll probably, now that this recent launch is kind of going to be cooling off here in a couple weeks or so. Definitely a lot of there's like an endless list of things that to continue to add on there, and so hopefully that portfolio in the next couple months has just more rich information, and then also just especially as the base redemption and the team 1 year cycle comes to an end here in October, just bringing all of your, so you don't have to go to all the different websites. You can just go to a single portal for all your team stake management and your base stake management, and so DCA will probably show up in there as well. But yeah, I mean, it's pretty wild how these, 1 billion hex staked in these things like that. That's a big deal. Like that's one of the, largest, that's up, it's like whale number 12. And most of those whales, they accumulated their hex when prices were hundreds or thousands of times lower than right now. Whereas these came about, I mean, Maxi came out, the hex price was like 14 cents or so. And so the dollars per hex, or the hex per dollar is much greater now, because it's like 1 billion hex, but that hex was procured in 2022. That's not hex that was procured in 2019. Big difference in that. And so that's a lot of hex to be accumulating there. And and since it doesn't experience some of those negative externalities of like a solo stake, and it just every day grows by a higher amount of hex than any solo staker would get on their own, it's kind of like this beast where sometimes I think like there's a lot to unpack, but also these are actually quite simple and kind of boring. Like, I don't necessarily think about the day-to-day dynamics of like, how much did they earn today?
Yeah.
I'm like, okay, like I'll look every couple of weeks, be like, okay, wow, in the last month we've earned this amount. And so the day-to-day kind of like compared to other, ecosystems, like with the Hedron, especially with the Icosa auctions, there's like day-to-day stuff that, kind of, whereas ours are like more seasonal. It's like, our stake cycle on team is a 1 year time frame.
Yeah.
And so you can't even stake and start earning yet. Like you can stake, but you're earning in the next year. So we kind of naturally have some like the longer time frame, like user actions.
Well, hex stakes are just naturally boring. So it's like, but there, they do kind of make hex staking more fun because there is, like a chart to look at and like a lot of psychology to look at. Like, for the first time, we're getting to like observe how people price a hex stake over time, which is really interesting. But I mean, we are talking about hex stakes, and that's one thing about hex I've always been like blown away about is like overall, like, I mean, the price run up was obviously a lot of fun, but like hex is a long-term boring product. Like you stake, you chill. And it's like somehow we have the most vibrant like creator community of like people talking about hex like for 2 years or now 3 years. It's been like really surprising. But yeah, I agree with that.
I think a big part of that is because like hex being a complete product, and then like you can build on top of it and extend it kind of how we have, but like with hex itself being complete, the barrier to entry for someone who wants to contribute in a meaningful way is mainly centered around like the marketing and information sharing. And so it's like very easy to make content that is that really contributes. Whereas like if you really want to contribute to Bitcoin, like, okay, you got to go through the 12-month like onboarding to the code base so you can kind of start making pull requests. And then, so it's like a multi-year thing where people that really only at like the top of their game can contribute. And same with ETH. Like if you want to contribute to ETH, like you got to be like, there's a very few number of people that actually can. But with Hex, it's like the major contributions are really centered around like marketing, onboarding, and growth. And so it's like a lot more people can contribute in that way, where people can come in, with new voices, new perspectives, new channels. And so I think that's why we see so much of that, is because it's like being a complete product that's like built on extensively. It's like we layered on top of it. We didn't have to like go and fix anything in it. It's just like we provided a new avenue for using it. So
do you think it's totally unrelated to that? Do you think it's a coincidence that the Dip Catcher algorithm is literally predicting the end of the liquidity wall right now?
I mean, it's probably like what makes that like top band is like kind of like, you can think of it kind of like the sum of all like people trying to locate the top. It's like, just like kind of what those bands, those bands are kind of like a cross between Bollinger Band, like with exponential moving average, and then also like things to do with average true range. So they kind of capture, like how the range, like the range that price has been in is kind of moving as like a unit. And so it kind of makes sense that liquidity would naturally, kind of follow those, because it's like if you're a liquidity provider, it's like, what are you thinking of?
How would you, Dip Catcher, how would you explain? Because that's definitely been a question that people have gotten DCA. Like, how would you explain that to someone who isn't very knowledgeable on charts, and how would they be able to like utilize them?
So wait.
So first of all, let's just go here first. Like, if you guys are interested in this thing, this is pro.dipcatcher.com. This is an algorithm you can get access to by converting ETH into DCA token, and then you can mint access to this dip catching algorithm for TradingView.
Yeah, so the dip catcher algorithm, it's something that I actually wrote in 2020. So early 2020, I started to write that, and it's what powered on my site. I used to have these email alerts that would go out when price was in a dip, and so this was the algorithm that powered those like dip catcher alerts that went out by email. It was kind of a like a little just one-off product. I mean, it was free, and there's also no unsubscribe button, and so that was actually the real dip. Like, and that was like the indicator that always worked. And calling the exact bottom was when people started messaging me saying, "Hey, can you remove me from the alerts? It's blowing up my inbox." That was actually always the alert that worked, like across 2 different cycles. That was like textbook. But it's really a system that is designed to help people dollar cost average into what is hopefully the lower quartile, or the bottom 25% of all buyers. It's like if you're just dollar cost averaging, you'll end up being around like right in the middle of all buyers. Because it's like you're effectively just like a moving average. If you're dollar cost averaging every day. But if you isolate your dollar cost averages to when this algorithm determines is a good time to buy, then you'll be in that lower quartile and potentially even lower, percentile of the people who bought over that period. And so it's really good for like a dollar cost averaging strategy, because it's not like something that is like more directional. It's not trying to call a bottom and call a top and like time the cycles, although we can talk
It's
later
done a
about
good job on the longer time frames, and
doing
I'll get into that in a second for sure.
yeah. But with this, it's more like a DCA, where it really tries to round out the bottom ranges of the price. And I made it in 2020, and every couple months just as I would go and back test it and revisit how it was working and just kind of modify it. And then finally, more recently, I just really packaged it up in a way that's, just like more useful for users. And
Right.
kind of, I improved the way that it identifies the dips, and identifies like the limit order. I improved that in a pretty substantial way in the last couple of months. So I was like, okay, I think this is actually something that can be quite useful for people. I've been using it on my own charts for 2 years now, and I've had a good time. And
If you took any of these blue buy signals here, you would have made profit within 7 days on almost all occasions. Sometimes you had to wait 2 or 3 weeks, but generally, this was the only one that was maybe like considered a false signal, because you wouldn't have had much time to sell for profit, maybe just like a day or two.
Mhm.
But generally, every single one of these, well, I mean, it would have if you would have waited 60 days. So this thing's
Yeah.
giving you bottom calls all the way along here on the weekly chart.
Mhm.
When I use this, how I would use this as a TA guy, totally unrelated to the developers. Like I would use it, I'd go into the daily, and now I'm combining this with the MEBAP, his LP indicator here. And if you notice here, a lot of the dip catcher algorithm is literally picking up key levels of where liquidity bands are. Like it's
Mhm.
just, I don't know if that's ironically how that's happening or what, but that's what I'm seeing. Because when I chart, I look for relevant levels. Look at that. The yellow line is right where the support band
Wow.
is,
That's crazy.
right? And the green
Yeah.
line is right where you fall off. And if I go up to the orange, this is right at the edge of this band here. And the red is right at the edge of the rest of the low liquidity zone before you drop off into no man's land. So it's just cool how this is also playing with the psychology of the market makers who's actually providing liquidity to be
Mhm.
traded.
That's interesting. I hadn't looked at how it lined up with active liquidity.
Yeah.
And it kind of, I think probably the way to describe why that's happening um, is that like both this particular, algorithm that generates those bands and the market makers themselves, they're trying to answer the same question. Like, what would be like the upper range of a zone based on recent price performance? and where is a level that price is highly likely to revisit based on prior performance. And so it's like they're both trying to kind of convolving onto the same answer, and that's probably why it does that.
Yeah.
I mean, I think that this can be a really powerful tool. Aside from the dollar cost averaging strategy with like those target limit orders, I mean, just using these to guide a liquidity. Like I hadn't even really thought of that as a use case for this
That's what I
algorithm.
do, man, is I try to give people other ways to look at the market. And
Yeah.
something that I like to do for people is like show them that because HEX is traded on chain, it's pure mathematics that drive and human psychology that drives price behavior and predictable cycles. That's the whole point of this, and it goes way beyond just simple charting. And it takes reminding people because generally it goes over most people's heads, and it's not necessary to make good investments. It's just not. It's regular people do not need to know this stuff, but if you find interest in it, you can really get an edge by learning this stuff, right? And so
Mhm.
now you have your ranges. You have, like, I'm literally showing you guys the ranges right now for upside and downside, and it's based on confluence of ideas from the Dip Catcher algorithm, which has got a good history of being correct, and then also where current liquidity sits. So these are two new tools made by by people in the community, developers. So check them both out: MBBOP's LP liquidity provider tool, and then on TradingView, and then the Dip Catcher algorithm at pro.dipcatcher.com.
I wonder if now that you pointed this out, if now it's going to be like a self-fulfilling prophecy, like liquidity providers are going to be using this to concentrate liquidity, and then so it like may only further kind of
Well,
reinforce itself.
I can tell you for a fact that since there's been many people that have been talking heavily about liquidity on Twitter now for basically like 6 to 9 months. A lot of that started in September of last year, June through September, but it really started to take root in the last like month or so because of the price performance, and now
Mhm.
there's eyes on this information again, and I think this is the most eyes
Yeah.
in the HEX space that's ever been on the liquidity before, because this is literally showing sentiment shift. For
Mhm.
example, back here when the price was trading down between 1.7 cents and 3 cents, this whole block of energy was back here, and the price traded in that range. And so then to draw this out to really give you guys a good visual, again, I can't do this enough because it's like the most important thing to understand. I'm gonna go ahead and take that down for a second, pull this up. So simply put, a month ago, this block of economic energy was here, generally speaking, right? Um, there was a little gap like right here, or actually it was more like between 2.8 right here. There's a little gap, and then there was liquidity on this side of the gap, and there was liquidity on this side of the gap, and that was when the market didn't know, are we going lower or are we going higher? Well, we
Mhm.
busted through that gap, and then all of this liquidity got flipped up and put here, right? So now, again, I'll go through what I went through earlier for the people that just showed up. Once price got above 4.2 cents, came back to test this band here, and it held as support for like a few hours, and then price started to trend back up, and then it got to the edge of the wall, and there, rather than buyers incur slippage and lose out on HEX because they'd be buying and pushing the price up 10-20% against themselves and getting less HEX, they waited, and then the sellers came in and pushed the price back down towards that band. But what's happening is every time they push it back down into that band, it's not going as deep into the band because there's more and more bid demand at these levels buying that up, and limit orders getting hit. So what ends up happening is every time the price comes up to the edge, it forces guys that were putting liquidity back here to move their liquidity up so that they can make fees out here. And so what's happening is now as the liquidity keeps shifting up, and then eventually what's going to end up happening is it's going to break into the low liquidity zone, and either cause the price to go volatile to the upside. Maybe a big whale comes in and decides, hey, we've been literally sitting on the edge of this for 3.5 days. I can't take it anymore, and just absorbs all the coins up at that price. And what that looks like in actual coin terms is right now there's 28 million HEX in the USDC pool. And there's probably like 25 million in the ETH pool. So there's only like 50 million hex coins on market right now that are meaningful and that you can get access to without incurring a ton of slippage. Oh, 15 million. This was at 28
Wow.
million earlier.
Yeah.
So these things are going down 10 million in a few hours, guys. Like that's what's causing this scarcity of coins, which is putting more and more pressure on this end of the bands. And it's forcing these guys to move this up, which all of this action at the same time is like an evolving organism that's starting to realize, oh shit, some big move is brewing, and like we're in a pressure cooker
Yeah.
and it's just going to explode. And every time that Bitcoin and Ethereum look strong, it adds fuel to Hex, because if the overall market is correlated and they're all moving together. By the way, we had this massive move on Bitcoin off those lows and did 18% in 3 days. This is setting up for a much bigger move. So if Bitcoin just trends sideways now, it gives Hex time to continue to consolidate and move upwards in its own way. And regardless, if Bitcoin breaks back down, Hex can move up against it and regain valuation on Bitcoin. If Bitcoin goes up, Hex can chop sideways and then chase later. Either way, it's bullish in the short term for like the 2-month window, where like 2 months is too much time with only this much breathing room on the liquidity. Do you guys get that? Like there's only 30 or 40 million Hex, and they're going down 10 million every few hours, and then up 10 million, then down 12 million, then up 9 million. And so the boat is running out of goods, resources, and we're in the middle of the ocean. Pretty soon a whale's going to come up and eat the whole damn boat.
Yeah. Have you been surprised by LPs not adjusting like above current price, how it is right now? Like I feel like historically, like,
you mean faster, moving more?
Yeah, like
faster?
exactly. Like I don't know. I feel like historically when I've looked at LP, it's like, it looks really bullish because there's no liquidity, and then it's like they
I think people are in disbelief.
Yeah.
And I also think that because it's just so early in the start of an uptrend, when you're talking relative time, the market's only been trending up for like a month or two. Like generally, I think that that stuff takes time for the market to figure out. And so yeah, I'm not surprised. I think the surprise is going to come when that big buy comes in and pushes price into the low liquidity zone and doesn't let it come back down, and then moves it like up 10 cents and then sets in their own liquidity behind price. Because the big guys is what sets this, this big block here could be just at 1 or 2 whales, right? And all these guys down here are the guys that keep shifting it up, because this used to have nothing down here between 6 and 10 cents. There was just like nothing there. So all the little guys are reshifting. The big guy can just push price up to like, let's say 11 cents, and then reset this liquidity band, bam, block it right down right there, start to form support, create a new triangle structure in the chart. And then, when you look at the Hex chart on the 3-day chart, and you go back to last year or 2021 when we made the same move, right now you're playing with a 515-day downtrend resistance line. And so that's why you're getting like this pause here at this level, is because you're just sitting on the edge of the liquidity. Sentiment hasn't fully went bullish yet. The market's like praying and playing possum that you'll get downside so that it can be absorbed. But someone doesn't want it to happen. Like, your hands are tied. You might have already missed the bottom, right? Or, well, I mean, I'm 100% certain the bottom's in, but you might have already missed the bottom. Like, then what choices do you have but to add to the buy side again? And if you're sitting on like $100,000 or $200,000 of dry powder that you wanted to get in, now you're forced with that decision now, which is why this thing keeps stair stepping higher, right? So,
and I think what we'll probably see is similar to what we saw during the whole bear market. Was you would see people that had liquidity positions on the sell side that they were using more like limit orders, where they were like just waiting for it to get filled and then they were going to pull. And then like, especially when there's like that big breakdown, you saw people removing their sell side limit orders and just market buying or market selling. I think that I haven't looked to see if we've seen much of that yet, but that'll probably be something to look at, is people that have a liquidity position on the buy side and then pull it and instantly market buy, like that conversion of buy side liquidity converting into aggressive market selling, like that, like, don't want to miss the boat, maybe FOMO. I think that's going to be important to look at, just kind of, because like there's the people that are providing liquidity as like a fee generating mechanism, and maybe to, just to support a market structure for an asset that they already care about. where even if they experience some type of impermanent loss, like they want to contribute in that way. But then there's the people using it as like a limit, as like a, like a limit order type of thing. And kind of like those two cohorts probably have different types of strategies and
yeah,
like
they're running out of time. Is I guess my point is like you're right about all of that analysis, and that now people are just unwilling to part with something that might rip, right? And so like this liquidity pair right here, you can see that the amount of Ethereum coming into the pools has gone parabolic. Meanwhile, the amount of HEX in the pools has gone parabolic. The amount of USDC in the pools has gone parabolic. So there's the amount of Ethereum and USD are less valuable to people right now than the HEX. And the reason why you got such a sharp decrease in HEX liquidity was because of two factors: buyers coming in, being left behind, needing to buy higher, and large LPs pulling it out of the pools and then taking it off market. For example, with the Hedron HEX pair, where the OA pulled 52 million HEX off the circulating supply, and it's not coming back, right?
That makes a lot of sense. Yeah, it's a great chart.
So shout out to Crispy Man. He built hexfire.io. A lot of my technical and quantitative fundamental analysis comes from the data that he puts together over there. And I can say that together right now we are working on some that's hex charts that have never been before seen, and some toolkits that have never been before seen on the side. And so when we do our stream together, probably at the end of the month or early in March, make sure you come to that one, because there's going to be some cool new things that you've never seen and new ways of looking at the HEX ecosystem. I'm pretty excited about that. So shout out to Crispy Man. He's awesome.
You guys should launch a token.
Not going to do it. I appreciate that, but dude, I will, I don't have anything against people that launch tokens. Obviously you guys are my homies and I appreciate all the good work you do. I'm not a dev. I like to analyze the markets. Not saying that there isn't a good place for that, maybe, but for me, like I love the perps, I love the derivs, but to me, the HEX T-share rate is the most important element to this whole equation, and like that's what and there's something about the purity and the rawness of direct exposure that I love. I'm not so bad that I'm unopen to buying some Maxi or unopen to starting an HSI to give me more optionality to sell and trade stakes in the future. Ultimately, my ultimate goal is to have that little HEX icon. Like that's what I want. Like and I know I'm not alone in that. Most people value the HEX the most, and like until we're at like all-time highs again, like that's when speculation gets on, and that's when all these like other plays come in, right? Because then all the mad gains off the supply expansion phase, that's when like all that money starts spiking volumes on like the low liquidity ones. And that's it's gonna be a really exciting time to get back together and speculate on what's gonna happen.
What would you say is your percentage staked versus holding liquid HEX?
Yeah, I'm 99% staked.
Really? That's surprising.
Yeah, I don't trade. I mean, I mint some Hedron, all that sometimes, but generally I don't, without going into too much detail, I don't trade. I don't need to.
Yeah, that's awesome.
Yeah, I used to try to trade a lot on Crack. Probably my most active day trading time was back when Kraken allowed 5x leverage. Now the only leverage you have to have you have to prove to them that you have a $10 million account, and I was like, okay, this is pretty stupid. But I almost while I was waiting for the HEX launch, I had sold my truck because I wanted Bitcoin for the HEX free claim. And in the time when we thought it was going to launch in 2 weeks, as of like March of 2019, and it didn't come out until December of 2019. In that time, I almost lost all my Bitcoin trading. Like on the breakout.
But honestly, here's the thing. I don't think most people know about Dip Catcher is like, I mean, when we were in our startup days, we locked a partnership in with a crypto that was like paying us kind of as a partnership, and like somehow Brian's trading was actually making us more money than like our startup was, and he got us through like some fucking tough months. Like, no, but like
he's smart. He's like, I guarantee you, he's good at. And I don't know, were you watching like the 1 minute, 15 minute, 30 minute charts on leverage and stuff? Because I did have a foray in that in 2019 where I was doing that too. was it actually right
Yeah.
before we had the HEX launch? I was doing that.
I mean, it was more like I would just put low ball limit orders and hope they hit, and sometimes they did. Like, and I would probably, and I used to
Bro,
talk
you really
about,
are the dip catcher through and through.
yeah, literally that was where it all,
Self-made.
the premise came
Self-made.
from. It's like I just pick
From the
out like a
bottom.
low
Here we
ball
got
limit
here.
order.
Rags to
That
riches.
was when Kraken used to have those bastard wicks, and
Yes.
I have been filled on plenty of a Kraken bastard wick. And what's pretty odd, what I used to use that for was like I would treat it kind of like a down payment on the Bitcoin, where I would snipe a wick, and then you have 30 days to either close out the leverage position or settle it.
You remember these bastards?
Literally, that dude.
This was it, man.
This brings up traumatic memories of me.
Yep, I remember this. This was 2018, 2019, end of 2018, bear market bottom. I remember, like, with this story time, I bought the shit out of 3,200 Bitcoin.
I almost lost it all on the move from 4K to 5K. Literally,
right here.
I had an adult league soccer game. I came home, prices pumping, and I literally almost lost all my Bitcoin.
You were short?
I was long. My order below didn't fill, and I had FOMO, and so I tried going long in the breakout, and then I just got seesawed. Literally, that's me getting liquidated in both directions.
This is his candle right here.
Literally, I almost got, and then I literally took like months off, and then but on the Kraken chart, this chart doesn't show it. Oh yeah, that's Coinbase. There was a wick down to like 4,200 that I had just an order left open because I literally was so distraught that I just was like, all right, I'm done trading, and I left the limit order there, and then all of a sudden I get like next time I log in, weeks later, after just taking time off from like a horrendous
shit. Is this
literally. That's the dip catcher right there. I got filled on that with like a pretty size, like that was like a pretty large, and so then I just took new USD in, and then settled the leverage position, so you're basically just like buying, because you're paying back the loan not by selling the position but just by new dollars in. So I was using their 30-day 5x leverage thing, kind of like a down payment, where I would snipe out the dips and then I'd pay with new money coming in. And so that was the genesis of Dip Catcher was the trying to snipe dips on the bastard wicks on Kraken.
and now we just DCA.
Yeah, much different times and much better performance this way too, which is
yeah.
There's a lesson.
Yeah, it really did save a lot of us, I think. I remember trading this in Bitcoin's history. It was like the big DeFi summer. So, little story time here. HEX was invented here on, when was that? The 5th, right? It launched on the 5th, or the 4th or 3rd. No, it was launched on the 2nd, but you could stake it on the 4th or something like that.
Yeah, it was like a 2-day roll.
2-day window. So then you had this triple bottom where you had a low, your lower low, and then a higher low, which is like a key triple bottom reversal pattern. And then it ran up, and then COVID happened. You had the big crash down, and then I remember just HEX just rocketed out of here and just went right back up into this general region here. And then Uniswap comes out and people start trading it on there. But I remember at this point I was I did buy HEX in the beginning, but I was like leverage trading a little bit of Bitcoin here. And I remember when this caught support here, that this was just the most amazing support I'd ever seen in my life, because I was trading 100x leverage on the 1 minute chart with small amounts. And I just remember, like, you'd enter a position here and then the price would fall down. You'd be up $800, and then it would come back up and you'd be down $500 and you'd be back up. It was like crazy because it was just like making like 0.5% moves. And but then, so then you could even catch the bottom of these wicks if it was like, obvious continuation. And so I made some money that way. But, ultimately that's a dead game, because like eventually the market gets your ass. That's just how it works. Yeah. I remember somewhere along this run, I knew we were to go long because this was in this giant squeeze. And if you look at this, it's relevant to HEX right now, because HEX actually performed this pattern very similarly. So what I'm going to show you guys now is the TVL locked in HEX. So this is Bitcoin, 12.5K summer top, DeFi summer, comes back down, tests 10.5K multiple occasions. Somewhere in here, Michael Saylor says, I'm long Bitcoin, I'm buying billions. then you actually start the bull run, and then you went off to 65 or 64K. But on the TVL here on the HEX amount locked, you can see that we were in basically a very similar pattern, and I'll draw that for you here now so you can see exactly what I mean. Let's see, some magic. Essentially, you have this type of a pattern where you can see the clear. It's a giant liquidity squeeze, and it's just like natural. Like, so look, you guys, like, we're at the beginning of the move. You know, as far as like new dollars flowing into HEX, more awareness. You know, you got Pulse Chain on the horizon. You got a documentary on the horizon. You got more derivatives and perpetual opportunities than you could ever hope to have had. You got the Dip Catcher algorithm live now. You got axisALiVE.com live now. You got all the resources you guys need to be successful, and I love giving back to the community. So appreciate you guys. Probably a good time to wrap up.
Yeah.
Thank you so much for your guys' time. Everyone in the chat, thanks for being here. I see we got 187 in the chat. I did read a lot of these comments. There was one that I wanted you to see. I don't know if this dude's still in here, but there was a comment about somebody needed help getting access to their Dip Catcher thing. So I'm sure the Dip Catcher being here, he'll see that and he'll get back to you as soon as he can.
So I looked up, I saw that comment, I looked it up, and that person hasn't, or they did get added. So they just need to find it in there.
All right. So like a lot of that was very hard. So if you guys are looking for the indicator, click indicators at the top of trading view, go down to invite only scripts.
Yeah.
And then you'll see it in here. He'll unlock it for you once you've been added. So
Hey,
you
you
can't
got
search it. You can't search it in here. You can't like type in Dip Catcher here and get it. You got to go down to invite only scripts. And if you typed in your name properly and were added, you'll be in here. If you mistyped your name, you're screwed and you'll never get access. Just kidding.
Samben 200378. I see it says Samben has access. So
cool.
Yeah, he'll find it.
And somebody
I go through and fill out all the people every couple hours. So 342 people have been added so far. I think about
price is going up.
800.
Price is going up, guys.
Almost 800 of them have been minted, and so yeah, that's pretty powerful. That there's now like 800 people that have indicated that they want to know when are low prices. So maybe it creates like this like Dip Catcher buy wall that just kind of ratchets up with the price. You know, if that many people are aligned on a strategy of rounding out any dips in the price, you know, who knows what that can do.
XESS says, I tried to buy some Lucky the other day to collect more t-shirts, but couldn't find any sizable liquidity anywhere. That's probably because people don't want to give it away. And when they do, they just market sell. So you don't get much going into the pools to buy. But eventually, you know, if people are going to have to buy that and speculate on it, they're going to have to buy the little bits that's in there, which is going to rapidly move price higher.
Mm-hmm. Yeah, and I'm not sure where, depending on what site they were on to try to buy, depending on the order routing that they do. Like I know on Matcha, it's better to go into HEX first and then there, because something with how it order routes is different. I think on Uniswap it may do a better job, but
maybe do a tutorial on that so people know like the steps to take to get the best price or something.
Mm-hmm.
I'm sure you have. I'm sure you've went and done videos after video on it. So make sure you guys do that. If you get HEX first and then swap for the perps.
Yeah,
that is where the most liquidity is.
1.2 million lucky in the pool.
Okay.
Yeah, that's a good.
Cool, man.
That's a really good point.
Thanks for having us on, man. This was awesome.
It's been really fun.
Appreciate it. Yeah, everyone in the chat, appreciate you for being here. We'll be back at you again live Sunday. We'll be doing a stream with Crypto Sloth. Maybe we'll have a special guest on as well. We'll be talking game theory. We'll be doing the deep dive onto mechanics. This is AXiSALiVE out. Holla at you, boys. Appreciate y'all.